Now we are going to start Unit 5 Financial Statement Analysis. First of all, let us know the stages of preparation of final accounts. There are three stages of preparing final accounts. First is trading account, second is profit and loss account, and third is balance sheet. Let us know what is trading account and how it is being prepared. The first step in the preparation of final accounts is the preparation of the trading and profit and loss account. The first part of it is trading account, which is designed to show the gross profit arising or gross loss incurred as a result of the trading activities of a business. Excess of sales and closing stock over opening stock, purchases and direct expenses is known as the gross profit. Gross loss is the excess of opening stock, purchases and direct expenses over sales and closing stock. In other words, it can be presented as under: gross profit is equal to net sales minus cost of goods sold. Gross loss is equal to cost of goods sold minus net sales. Net sales is equal to sales minus sales return. Net purchase is equal to purchase minus purchase return. Cost of goods sold is equal to sales minus gross profit, or opening stock plus purchases plus direct expenses minus closing stock. Now let us see the format of trading account. On the debit side, it will be mentioned as to opening stock, to purchases, to wages, to carriage inward, whatever the company has incurred, and on the credit side, sales and closing stock will be mentioned. The answer of trading account will be in either gross profit or gross loss. If the credit side increases, then the answer will be in gross profit, and if the debit side increases, the answer will be in gross loss. Next is profit and loss account. Profit and loss account is the second part of trading and profit and loss account. After ascertaining gross profit, management of a business will be interested in knowing the net income earned or net loss incurred at the end of the accounting period. With this object, a profit and loss account is prepared. The profit and loss account is an account which is designed to highlight the net profit earned or net loss incurred by the business entity arising from its transaction during an accounting period. It contains all the items of revenue gains, losses, and operating expenses relating to the accounting period. Let us see the format of profit and loss account. On the debit side, first of all, we should know that in trading account, direct expenses are being mentioned and direct incomes are mentioned, whereas in profit and loss account, indirect expenses and indirect incomes are mentioned. Now let us see on the debit side, to salaries, to carriage outward, to interest on loan, to bad debts, to advertising, to export duty, to package, to rent, to commission paid, and to depreciation. Whereas on the credit side, discount received, commission received, rent received, income from investment, and dividend received. If in trading account gross profit is your answer, then it will be mentioned on the credit side of profit and loss account, and if the answer in trading account is gross loss, it will be mentioned in the debit side of profit and loss account. Now the answer of profit and loss account will be in either net profit or net loss. If the credit side increases, the answer will be in net profit, and if the debit side increases, the answer will be in net loss. The answer of net profit or net loss of trading account or profit and loss account will be mentioned in the balance sheet. The balance sheet is a statement at a given date showing one side the trader's property and on the other side the possession of the liabilities. Now let us see how balance sheet is prepared. On the debit side, liabilities are written, and on the credit side, assets are written. Let us see now what are the assets which will be mentioned. Fixed assets, that is land and building, plant and machinery, furniture, vehicle, goodwill. And current assets, sundry debtors, cash in hand, cash at bank, bills receivable, prepaid expenses, closing stock. And except this, investments will also be mentioned in the assets. Whereas in the liability side, share capital, in the share capital, net profit will be added, which will be taken from profit and loss account, less drawings, and the amount will be written whatever it comes. Long-term liabilities such as debentures, loans and advances from banks and other loans and advances will be mentioned. Other than that, current liabilities such as sundry creditors, bills payable, bank overdraft, outstanding expenses, income received in advance will also be mentioned. And except this, provision for taxation and proposed dividend will also be mentioned. Thank you.